Warren Buffett started his first business at age 6. He bought his first stock at age 11. And today, he's worth over $120 billion. But how did a kid from Omaha become the most legendary investor the world has ever seen? Today, we will break down his investment journey, from his earliest deals to building Berkshire Hathaway into a financial empire. Warren Edward Buffett was born in 1930 in Omaha, Nebraska. His obsession with money started early. At just 6 years old, he bought packs of Coca-Cola from his grandfather's store and sold individual bottles for a profit. By age 11, he bought his first stock, 3 shares of City Service Preferred at $38 each. That experience taught him one of his first lessons: patience pays. The stock dipped to $27 before rising to $40. He sold, and soon after, it skyrocketed to $200. That stuck with him forever. Buffett's real transformation came when he read a book at 19 that would change his life: The Intelligent Investor by Benjamin Graham. He later studied under Graham at Columbia Business School, where he learned the principles of value investing. Buy companies for less than their worth. Focus on the intrinsic value. Always demand a margin of safety. Buffett called Chapter 8 and Chapter 20 of that book his Bible. In his 20s, he even offered to work for Graham for free and eventually landed a job at Graham Newman. In 1956, Buffett started the Buffett Partnership with just $105,000. $100,000 from investors, $5K of his own money. He used his value investing skills to find undervalued stocks. His average annual return, over 30%, nearly double the S&P 500. One of his famous early plays? American Express, after a scandal crushed its stock. Buffett saw opportunity and poured millions into it. It paid off massively. By the mid-1960s, Buffett had over $100 million under management. Then came a mistake that would define his future: buying a failing textile company called Berkshire Hathaway. Buffett bought it out of frustration with the management and later called it one of his worst investments and his best decision. Why? Because he used it as a holding company to buy other businesses. First came insurance, GE, ICO. Then Coca-Cola, See's Candies, The Washington Post, Dairy Queen, and dozens more. Buffett stopped picking cheap stocks and started buying great businesses at fair prices. Businesses with strong brand, moats, and management. So what makes Buffett different from Wall Street traders? His philosophy: buy and hold forever. Only invest in what you understand. Avoid debt. Be greedy when others are fearful. He's famous for saying, "The stock market is a device for transferring money from the impatient to the patient." Even during crashes, Buffett stays calm, buying when others are selling. And his partner Charlie Munger added another principle: it's better to buy a wonderful company at a fair price than a fair company at a wonderful price. Today, Berkshire Hathaway owns or holds major stakes in Apple, Coca-Cola, Bank of America, Chevron, American Express, and more. Buffett's net worth? Over $120 billion. But here's the kicker: over 99% of it was made after he turned 50. His true superpower? Time plus compound interest. So, what can we learn from Buffett's journey? Start early, but it's never too late. Invest in what you understand. Think long-term. Let compounding do the work. And remember, you don't need billions to invest like Buffett. You just need patience, discipline, and time. If you enjoyed this, hit like, subscribe, and drop a comment. What's your favorite Warren Buffett quote?